Is Microsoft, ticker MSFT, a buy right now, or should you wait? As always, this is for learning, not a buy recommendation. Do your own research before you trade. Over the next few minutes, I'll walk you through everything: the business, the chart, the fundamentals, what Wall Street thinks, and where the trade goes wrong. These are swing trade setups, roughly 15 to 30-day holds. Let's get into it. Quick company check. Because the chart means nothing if you don't understand the business. What is Microsoft? In plain terms, Oration develops and supports software, services, devices, and solutions worldwide. It's a technology company and worth about $2.7 trillion. To put that in context, that puts it among the largest companies in the market, a mega cap, which usually means steadier moves and deep liquidity. With the business covered, let's look at what the price action is telling us. Now the chart and the technicals. This is how we judge timing. And I'll explain each piece as we go, so it's useful even if you're newer to this. Two key levels on the chart: the 50-day moving average for the near-term direction, and the 200-day for the bigger trend. Right now, Microsoft is trading about 11% below its 50-day and 19% below its 200-day. So momentum has cooled and the trend is in question. Momentum checked via RSI. A reading above 70 says the stock may need to cool off. Below 30 means it's been hammered and could bounce. Here it's low at 18, washed out, which can set up a bounce if the trend holds. It's about 34% below its 52-week high. Still well off its peak, so this is more of a recovery play than a breakout. Here's the thing though, a great chart on a weak business is a trap. So let's check the fundamentals. Is the company actually growing, and what are you paying for it? On growth, earnings are up about 23% from a year ago, and revenue is up about 18%. That's the kind of growth that attracts institutional money. And institutional money is what moves prices. Valuation check. The market is pricing this at roughly 19 times next year's expected earnings. Right in the middle, you're paying a fair price for what you're getting. Now let's see what Wall Street thinks. And what's on the calendar? 55 analysts cover this stock, and the consensus is a strong buy. Analyst ratings aren't gospel. They tend to lag the move, and they almost never say sell. But a wall of buy ratings does remove one obstacle. On the calendar side, there's no earnings report during a typical swing hold, so the overnight gap risk from a surprise is off the table for this trade. If you are finding this helpful, a like actually makes a difference. It is how YouTube decides who else sees this. Now, the part most people skip: where does the Microsoft trade go wrong? Let's start with the risk because that's what you manage. The stock is trading under its trend lines, so you're not riding momentum. You're trying to catch a turn. That's harder and riskier. The bull case is straightforward. If the current trend holds, the buyers stay in control, and the stock works higher from here. My rule: plan the exit first, keep the position small enough that you can be wrong without pain, and cut it if the level breaks. That's what keeps you in the game long term. Every stock has two sides, so let's do both: the bull case and the bear case for Microsoft. First, the bull case: what's working? Earnings up 23% from a year ago. Revenue up 18%. Wall Street agrees. A 5 analyst rated it a buy. But here's the bear case: the risks. Below its 200-day, the long-term trend isn't confirmed. Both sides laid out: the reward and the risk. You decide which case is stronger. My verdict: wait on Microsoft. The trend hasn't confirmed, and buying here means hoping instead of trading with an edge. Let it prove itself first. If this breakdown helped, hit subscribe. I post data-driven picks every market day on MoneyQuest Lab. As always, do your own homework, manage your risk, and never bet more than you can afford to be wrong on.